So this is a bear market, huh? That's what I hear. Ever since that high, we've turned this into a bear market. That was the perfect time to top out for a bear market, and now we will decline, and we will have some kind of either an A, B, C down into lower liquidity, which will then make itself into some kind of head and shoulders pattern and go way lower into the 4-year cycle low, where everybody can buy and get in at 1/3 the price of what we're at now. That's what we're hearing out there. At least that's what I've been hearing in my feed. Not that I paid too close attention to what's going on. All I care about is the trend and whether or not you're making higher highs and higher lows. And right now, you did close a lower low than that previous low. So technically, you should have a sell for like a head and shoulders pattern to come push the lows. I've been matching these patterns, like the current pattern up, matching it with this pattern. I'll draw that up for you in a second. But definitely came down and triggered the quote unquote bear flag. So there's liquidity there. If you trigger that bear flag, that's liquidity. And that's just like the lesson in liquidity that I had in my previous video, where I was saying if you broke out of this trend line, that's liquidity. You broke up, liquidity, flush down, break up again. You took all of those liquidities and rejected. So is that a rejection or is that just grabbing liquidity? Because after taking out these highs, these equal highs, the orders have to go somewhere, and these are the liquidity spots to push them into. So either that's enough and you can go up from there, come take liquidity up higher again, small pullback and push off, or you're going to come lower and grab these lower liquidities to leave no stop losses behind if there's any stop losses there or there, which I can see price going either way. Matching out the patterns, there's few patterns that I'm currently matching. The primary one, the way it kind of looks, is matching that leg up there. Let me draw that out. So this leg went up like that. This leg also went up like that. They look very similar in size and shape, angle, and all that. Coming off of that, you may be repeating that. So that is certainly a possibility. And then you come and retest the lows before popping up and down. Pop back up, down. And that way you would have a contracting triangle, just as this was an expanding triangle, giving you a distribution into a reaccumulation, and then repeat that leg. Zooming out here on the entire structure here, taking that low with that low gives you a trend line touching there, which would be a back test of this trend line. They intersect there at liquidity. So that would be a high probability area to say you probably have at least a bounce there. If not, that's the bottom. Stop loss goes at the November low, and see if you get upper liquidity or continuation up. If the pattern reverses exactly from where you're at right now, what you would end up seeing likely would be a push into like 100,000, small pullback, push up, and a grind. And you'd be repeating this pattern over here, which it's kind of looking like it. It's kind of taking its sweet time, and the timing kind of works okay with it, with how long this whole consolidation is taking with regards to that. So those are the two things that I'm currently watching. This certainly can be your Elliott wave structure 1, 2, 3, 4, 5. It's kind of losing the shape that I like to see for a wave 4. It actually didn't even come to the proper measurement. It should have came to 98,350, I think, to make a perfect 50% retrace of your wave 3 down. So it missed that target by a couple $100. So it's kind of looking like this move up down was part of this. Like this moved down and then moved back up, just like that, moved back up. Now this is what you're doing right here. So if that is the case and you're running into a daily cycle low right here, you would be repeating from there. You should push up into a high, slight back test, and then short squeeze. So the short squeeze would come this weekend. If that does end up pushing up there, you'd have a small pullback, and then over the weekend you'd start pushing up, and then next week would run, or maybe by Sunday you'd start running. For anybody that remembers, this breakout right here was on a Sunday and then continued over the weekend. I think by Sunday you were right here. So this was a Friday breakout, and over the weekend you pushed up, and then by, I think, Monday you were all the way up there, and then continued to grind up. Well, now you're kind of doing that in reverse, where you're grinding up, and then maybe you short squeeze over the weekend, and you'd be at all-time highs by like next Tuesday. Not calling for it until it happens. And there's a setup for that. And the setup says that if you pivot right here and go to 100,000, you'd have a small pullback to retest these highs as support, and then grind up and break above that 100K, and then grind up above 100K and go. So that would be something to watch for. But currently, seeing as you have a lower low close, expect a lower high and a push down into maybe those trend lines, the back test of the trend line and the trend line from previous lows. And that would be somewhere around 82,600, 82,500 would be the liquidity. And that would take all of the liquidity from the range without taking out the low. And go from there, and you'd repeat this. And your target would be somewhere around 130, 140. So if you break like tomorrow or the next day and start short squeezing over the weekend, this leg sends you a target of 180,000. So then that would be your ABC, and 180,000 becomes the target. So this would be like, that's repeating there, that's repeating there, something in the middle, choppy, choppy, chop, choppy, choppy, chop, go, go. Because you are currently still making higher highs and higher lows here. And how much higher was the high? Let's measure the trend. We'll say the highs from December of 2024 to current all-time highs. It was that much higher, 14% higher. Put that from the low. Lo and behold, where does it come? Right where a higher low is supposed to come, and it's just reaccumulating until it's not. As soon as that closes a lower low, then you'd have a sell. Like, say you get priced down to, say, 62,000, then you take this up to all-time high, and your sell becomes 106, 107 area, because you'd have a lower low. That would be your lower high. But you don't have that. So you should be looking for higher highs and higher lows. Maybe we can take this chart back to 2017. Probably be a good example. The whole way up on the Coinbase chart. Higher high, higher low, higher high, higher low, and so on and so forth. You still had higher high somewhere in this vicinity where these two legs match. You barely made a higher high, but your higher low still came in higher. And higher high, higher low, higher high, higher low, higher high. Then you made a low and then a lower high into a lower low. You had a leg down, It didn't match any of these other legs. That suggests something different is happening, and you had something different happen. Nice little consolidation, which was a reaccumulation into a breakout show of strength and a back test into the 2022 lows. Let's turn on the weekly. Weekly, higher high, these are your higher lows. That's your higher high. That came in that much higher. Your higher low came in that much higher than that low. Now you're pushing up to a higher high. So if price was to fall down, where would you look for a higher low? You'd measure it from there to there, project it from the bottom. Your higher low would come all the way down there at 28,000. That's where you would look for a higher low. Do I think that's what's happening? Not yet. First, locally, you need to make a lower low, then a lower high. Could it all happen in one fell swoop? Sure, you get stopped out and it flushes down to 28,000. But if it does flush down to 28,000, you know that's an opportunity as a potential higher low. The way that I'm currently looking at this, well, let me draw it out on the weekly. As you move down, move up, and move back down. This leg right here measures pretty close to that. I think it's at the 786, but the timing is perfect. It's exactly 1 year on each one of those legs down. So that gives kind of confluence that those match, for me anyway. Then after, hey, why not just repeat this? Something like that. Might go up higher than you expect. It might make it to the 786 extension, which gets you up to 500,000 eventually. How long does it take? Probably takes longer, but you're still making higher highs and higher lows all through here. Same as here, taking its sweet old time. Like that type of scenario happening here. And then this may start accelerating. Doesn't have to. It could certainly be in a bear market. But this is what a bear market looks like. The quote unquote bear market, which is just a correction. We don't have that yet. You may want to say this is doing the same thing right here. I think people are looking at that. I don't think that's what's happening because it looks too painfully obvious. And like I said, when I was talking with Camel, I was like, I'm expecting that to happen. And everybody's going to look at bear flag and we're just going to do this. This is bear market. Here's your opportunity. Whereas when this was happening over here in 2022, there was nobody calling for prices down to 17,000. I don't think it was until this breakdown right here that it made sense to go down to 17,500. As soon as you're making higher highs, higher lows, this was still a higher low until it wasn't. So similar to what you're doing now, it's still a higher low until it's not. I don't know, a lot of information, but not much going on in the charts as far as movement. We've been chilling in this range for a while, getting chopped back and forth, just looking for liquidity. Similar to how things were up here, where price was just chopping up and down, looking for liquidity. It's kind of doing the same thing, but you are on a weekly basis closing higher highs and so far higher lows. You have a high, higher low, higher high, and working on a higher low on a weekly. And all you need is the daily to close a higher high, then a higher low, and then the weekly and the daily will be in sync with each other. Then the 4 hour can get in sync, and then you have the alignment. And once the alignment happens, you have moves like this. It keeps repeating, and not many people want to partake in these moves up. I remember since the ETFs were launched January, I thought it was January 9th, 2024, there wasn't many that partook in this rally here. There was many that were selling their stuff saying, well, that marks a top. It rejected, but then you have this kind of face melting rally. It just went right up and then consolidated, and then it went up and then consolidated and then went up. I remember this breakout. Nobody believed this breakout either. And there it is, 3 weeks of straight up, 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 up. Many Elliott wave traders were calling this very corrective, but it was still making higher highs and higher lows. And that's kind of the problem with Elliott wave a lot of the time is you'll have a count that you'll say, well, my count says it goes down from here, or this looks like an ABC, so I'm going to trade it like an ABC, and not taking into context the correction that ensued and then making a change in behavior with a higher high and higher low. And you kind of have something similar going on here. I'm going to change this to a linear scale for Elliott wave theory. Let's bring it back to a daily here. 16 minutes in. And this would be the way to count the Elliott waves is measure. I always measure my waves. Wave 1, wave 2, and you made it to the 1.618. We're damn close to it. Right there, the 1.618. So from there, if that is indeed wave 3, you'd expect a wave 4 retrace. That would retrace 50% of that wave, and then you would target the 2.618 at 56,000, or potentially 70,000. Another way to target that would be to measure waves 1 and 3 together and project from a potential wave 4 and target the 618, which currently is sitting at 69,000, which is not a bad target. That would take out the liquidity from 2025 and get you a back test of the previous range over here. It's not a bad target. I'm not going to say it's not going to happen, because it is a valid Elliott wave count, and you can trade it as such. And your invalidation, I believe, is wave 1, the bottom of wave 1. But that would be 102. I guess if you're trading at 102, the Elliott wave structure is broken. But this already doesn't look real good to me. But yeah, it would be something like that. So maybe you did the breakout and you're going to backtest real deep sometime next month. But my point is that just because there is an Elliott wave count that says it's going down there, that doesn't mean it has to go down there. It is a suggestion. There is a way to trade that. And currently, if you would want to trade that, your invalidation is certainly that 98,000 level. So from there, targeting that, let's mark that off down at the 618. Be targeting there. Let's remove this measuring, and then we'll measure a new one. Going from, hey, potentially we have wave 1 complete. And wave 2 comes up to, say, 94. So 94, 95 would be your sell, and target would be down there. If you come down here to take out that low, you'll likely have a little consolidation bounce and take it down to 69,000. It's not a bad trade, not a bad idea. But I think if you break above that 98, I think that invalidates it. And I would watch for this thing to move upwards very, very hastily and leave everybody behind that is not watching for that. Because oftentimes what Bitcoin likes to do is make everybody look down and then it shoots up. And then it makes everybody look up and then it shoots down. So just don't don't be looking in one direction if you're going to trade. If you're going to trade, look both ways before you cross the street. And know your invalidations. For sure, you have to know your invalidations. For me, if I was to trade this short, I did not trade this short. I wanted a few $100s higher, and I figured on Monday we'd probably get it. We did not, and price just decided to just take off without me, which is fine. I'll catch a different trade. And if it does want to continue down, it probably has to break this low, bounce again, and then I would take some kind of ABC down. May try to take a short, maybe at 95, but since we're so close to the daily cycle low, I'd be apprehensive about that. And potentially you get the weekly candle higher high, higher low, and the daily closes a higher high, you buy the pullback. I think for like Elliott wave theory, I think a lot of people understand Elliott wave theory quite a bit, and they try to do it, and they say, well, it's got to be an ABC now because this didn't impulse up. And I've seen this being a bottoming structure in Bitcoin so many times now, especially since BlackRock entered the market. This is your standard bottoming, is an ABC up, comes back down to tell you that that's an ABC. And why is that important to do? Because you get people to sell there after a three wave, but then this makes people think, well, there's a three wave there, I'll short that one too. And then what does price do? It keeps going because you're selling as the market maker is buying, so the market maker has to continue pushing it up until capitulation happens and you get buyers. Then the market maker can sell his position, and then price comes back down. So be careful with the Elliott waves and being committed to one count versus another. Watch your trend, because your trend on the weekly is up. Your trend on the daily is now at risk of going down because you did close a lower low there. Your lower high would be coming in around 94, 95. But if you close a higher high, then you have a higher high, buy the higher low, and expect for continuation up. So hope that helps. Know your invalidations, keep them stops tight so you can have a good night.